Yo, 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 what's up? What's up? It's Coach Nick Money in the house. And in this episode, we're going to review the 3-year weekly chart for SPY. And we're going to make some predictions for this year based on the review of the 3-year weekly chart of SPY. Let me begin by saying we are not stock professionals. We are not financial planners. This is not stock advice. This is not financial planning. This is a show for entertainment purposes only. Da-da-da-da-da-da. Let's get right into it, baby. Let's get right into it. And this is a 2-part series. This is part 1, which will be on social media, but part 2 is going to be exclusive to our membership site. If you're interested in getting content like this, you can join our membership site with the link, which is in the description. The website's www.coachnickmemberships.com, and of course joining will also entitle you to our daily picks, which have been off the charts lately. We called earlier this week, we called MSGM on Monday before its big run Tuesday and Wednesday. It was at $2.50, and it ran up to over $80 by Wednesday, and we called it Monday night before the price action moved up. This is being recorded on February 4th. The market closed on February 3rd, 2023, which was yesterday. So if you want to join and see part 2, as well as get over 300 of our episodes that in our membership site, you can go ahead and take a look at the link below for that, as well as taking a look at the link to join our private Discord for our picks. Both links are in the description. The 300 courses comes with the picks included, or you can just get the picks by themselves. The links are certainly in the description below. And of course, ladies and gentlemen, there's no obligation to do this. And of course, our courses basically teach you how we look at the market and how we trade. But again, there's no guarantees that it's going to help you succeed with your trading. It is basically an analysis of how we trade, and we share our thoughts with you. You always have to do your own due diligence, but we think that our content's pretty good for us. So there you have it, ladies and gentlemen. Let's move into the review of the 3-year weekly chart for SPY, and let's start from left to right. And we can see that prior to 2020, there was a significant drop in price action. You know what happened. We had the little pandemic, and the price action of SPY went down to $218.26. For those of you who do not know what SPY is, it is a conglomeration of the top 500 companies in the United States that's traded in the New York Stock Exchange, and it gives you a good feel for where the economy is going when you take a look at it, because it's the top 500 companies. Okay, so we could see what happened in 2019. The price action collapsed when we had that event, and then of course the price action starts to recover, and then from there the price action really starts to move in an upward direction. You could see 2020, the beginning of 2020 was pretty good. We're moving forward. The first 3 quarters are very, very bullish, and then we start seeing a staggering of the price action over here, and there's a recovery, and then the tail end of the 2020 time frame going into 2021 is pretty flat. And then we hit a high at the beginning of 2022 of 479.98, and then the price action falls off a bearish cliff, and we could see the resistance bearish trend line over here, the support bearish trend line over here, and you could see that the price action has been channeling downward pretty much for most of 2022, actually pretty much all of 2022. And here's 2023, where we see the price action finally breaking through the downward trend and moving forward. So what does this mean? Does it mean that the bearish trend is over and we're moving into a bullish market? Well, let's take a look at it a little bit more closely. You can see that we have these yellow support lines right here, 1, 2, and 3, and it appears that we have the beginnings of a bullish inverted head and shoulders pattern, which would be indicative that we're going to have a breakout and price action should move upward. This white squiggly line right here is the 200 EMA. You can see that it is now acting as support for the price action. You can see that we drew a trend line over here indicating that maybe there's a break of this downward trend line and that the price action is moving upward. And we can see that the resistance trend line, bearish trend line over here, seems to be now support for the price action. But what we're also seeing is that the price action did break another resistance level of $410, pierced up to almost $417 and pulled back. This happened all of this past week, and the price action seems to be pulling back downward. But again, that's not unusual because price actions don't move in straight lines up and straight lines down. They do zigzags. I mean, take a look at all of 2022 with the bearish situation. Price action goes down, it tries to recover, it goes down some more, hits support, bounces up, hits resistance, drops down, goes up, drops down, goes up, hits resistance again, drops down, goes up, hits resistance, and drops down, and then finally pierces through the trend line downward, and hopefully this is the beginning of a bullish pattern. What I want to really see is I want to see this price action move all the way past these resistance lines right here and clear the 440 mark and really start to move forward, because once it does that, then you have a much more clear indication that we're done with the bearish downward trend. It certainly looks like a reversal is in the mix. You can see that the price action is starting to curl. We are not having this downward channel where the price action just keeps going down and hitting resistance and dropping down. That stopped. So we do have a turning of the price action, and let's take a look at it a little bit more in depth. If we take a look at this area right here, this area, remember each candle is a weekly candle, so this area right here is right around the time that the consumer price index started to really show signs of coming down. Remember, in the middle of 2022, the consumer price index was well over 8%, and now it's at 6.5%. And of course, the Federal Reserve is looking for a target of 2%. So we're still well over 3 times the consumer price index, but it's a lot less than what it was before, where it was well over 4 times the consumer price index target. So we could see that there were consistent 0.75% interest rate hikes during most of 2022, which obviously did not do well for the stock market and pushed the stock market prices downward. But of course, right around here is when the Federal Reserve signaled that they were going to contemplate raising the interest rates at a lower amount. And in fact, right around here is when we got the report from the Consumer Price Index being at 6.5%, much lower than what it was before. And we also noticed at this point that the Federal Reserve hiked the interest rate only 0.5 percentage point instead of 0.75 percentage point. So you could see in both instances that you had price action trying to pierce the downward trend line right over here, and it actually formed a double top, which is a bearish pattern, and caused the price action to temporarily flush downward. But then, of course, the Federal Reserve started to signal that they were going to ease up on their interest rate hikes, and that the next interest rate hike, which was February 1st, 2023, which actually happened this past week, might be as low as 0.25% rather than 0.5%. And in fact, it came in at 0.25%, and that obviously was one of the catalysts for allowing the price action to turn bullish and move upward, because there's an indication that there's going to be an easing by the Federal Reserve to basically make it, less interest rates, and we're starting to get an early handle on the inflation situation. Also, there were a lot of companies that came in with better than expected earnings, like Tesla, as well as Meta, the parent company of Facebook. So that was kind of unexpected, and that also added to a sense of relief that we're turning the corner. But quite frankly, to me, it's still too early to say we're out of the woods. Certainly, it looks like we are curling towards a bullish pattern. We do have a inverted head and shoulders pattern here, and that is certainly a positive thing. And it does look like the price action is actually curling, and maybe the worst of it is over. And obviously we have a lot more support lines underneath here, indicative that the price action is going to continue to push forward. But I will feel a lot more comfortable when I see SPY well over $440. That would make me absolutely ecstatic and feel a lot more comfortable that we have enough volume coming into the mix. So I do believe that this might be the beginning of a bullish pattern. Again, this is not advice. I'm not a professional. This is just me talking to you and telling you what I think. That's all this is, all right? Hopefully, it is the beginning of a bullish pattern, and we'll see more stability and less choppiness in the market so that we can go long, right? Go long, baby. Go long. So once again, this is part one of a two-part series. The second episode will be exclusive to our membership website, www.coachnickmemberships.com. The link is in the description. And if you want to get all of our content, we have about 300 episodes in there that you can go ahead and sign up for, and it also includes access to the amazing Discord channel that we have, where we call absolute runners that are just massive, multiple baggers. We've had stuff that's run 1,000%, 3,000%, 7,000%. And we just do it on a consistent basis. So you go ahead and join the membership site, or if you want to just join for the picks, we also have a link in the description for our private Discord picks channel only. All right, that's basically it, ladies and gentlemen. It's Coach Nick Money. Much love, and we are out of here. Peace, baby. Woo! Oh my God.